This is not financial advice. I'm recording my thoughts about Microsoft stock. Microsoft just reported their earnings and they beat both the revenue as well as earnings per share estimates. But the stock is down about 3%. It's currently trading at about $340. A few months ago, I made a valuation of Microsoft stock in 2027 and I will leave the link in the pinned comments of this video. In the most recent quarter, they grew their revenue by about $56 billion and that's an increase of about 8% year over year. In the most recent year, that is 2022, they grew their revenue by about 18%. And now they're saying they are only growing about 8%. Even though this 8% growth has beat the analyst expectations, people expect double-digit growth from Microsoft. With respect to net income, they made about $20 billion. That's about 36% net profit margin, which is unheard of for majority of the companies. Even in the FANG companies, only Microsoft gets more than 35% net profit margin. So it's not a surprise. And Microsoft CEO said organizations are asking not only how, but how fast they can apply this next generation of AI to address the biggest opportunities and challenges they face safely and responsibly. So he's anticipating that there would be acceleration in revenue growth, but we have to see what happens in the guidance. So overall, Microsoft grew their revenue by about 8%, right? So let's look at how their individual business segments are doing. You can see on the screen, Microsoft has 3 different revenue segments. I've explained them in further detail in the valuation video, which I encourage you to watch. The first revenue segment is productivity and business processes. This includes LinkedIn and Microsoft Office 365. The revenue in productivity and business processes grew by about 10%. That's double-digit growth. And in the intelligent cloud, which includes Azure, so this is the high growth revenue segment of Microsoft, it increased by about 15% year over year. And the Azure in particular grew about 26%. That's still really good growth. Compared to AWS, this is actually much better growth. The more important part now is what happens to this Azure growth of 26% in the coming quarters, where it will increase because of this generative AI application, or will it stay stagnant? It should not decrease because that's going to be bad for the stock, but a lot of growth of Azure is already priced in the stock. In the third revenue segment, that is more personal computing, this includes Windows and Xbox. That has decreased significantly in the last quarter, but the deceleration has reduced. It only decreased by about 4% in the most recent quarter. Overall, Microsoft returned about $9.7 billion to shareholders in the form of share repurchases, but this is a $2.7 trillion company. So $9 billion share purchase will not move the needle at all, but it's still something. Microsoft fiscal year 2023 ends in June, so they have given us the fiscal year 2023 results. The revenue was about $211 billion, which is an increase of 7% year over year. And the net income was about $72 billion, which is very significant. It's up by about 6% year over year. Let's quickly look at the income statement. The total revenue in the most recent quarter, as I've highlighted, is about $56 billion. Gross margin is close to $40 billion. Surprisingly, that's only 70% of the total revenue. But as we know, Microsoft has a huge advantage with respect to sales and marketing. They do not need to spend too much to advertise. So the operating costs are much lower compared to their peers. So the net income would be very high. Net income is about $20 billion. And with respect to the number of outstanding shares on a diluted basis, you can see they have about 7.467 billion outstanding shares. But a year ago, they had 7.506 billion. So there is a share repurchase, but it's not significant at all. Now let's look at whether $330 stock price is worth a buy. I'm showing the valuation in 2 different cases, one with reasonable assumptions and the other one with great execution. On screen, I'm now showing the case with reasonable assumptions, in which I've assumed 15% revenue growth year over year. And in the most recent quarter, they're only growing at about 8%, right? But one quarter result will not change anything. It just gives us an idea of if anything drastically changed with the company. We still have 2 other quarters left, so Microsoft can reaccelerate their revenue growth. And once we come out of this very challenging macroeconomic environment, they should get back to double-digit revenue growth. But I'm counting on 50% year over year growth for Microsoft. With that, they can make about $400 billion of revenue in 2027. Remember that in the year that ended in June 2023, they made about $211 billion of revenue, right? So I'm counting on them doubling their revenue in the coming 4.5 years. And the net profit margin is 35%, which is very reasonable for Microsoft. They have consistently made more than 35% net profit margin. And the net income in 2027 would be about $140 billion, and I'm giving a multiple of 27.5. People can pay a little bit higher, but 27.5 I think is reasonable for the kind of growth rate and net profit margin they have. With that, Microsoft would be worth about $3.8 trillion in 2027. I'm assuming a buyback of 2%. Again, don't think that 2% buyback is less, because this is a $2.7 trillion company, and 2% buyback would cost them about $54 billion a year. They already pay a dividend, and in the most recent year, their net income was $70 billion, right? So 2% buyback is actually optimistic. With that, the stock price in 2027 would be about $565. Currently, the stock price is about $340, right? So that's about 66% gain. Plus, they offer about 0.7% dividend year over year. So in 5 years, the dividend accumulation would be about 3.5%. So overall, we're looking at close to 70% gain, which is a good gain. In 5 years, it's definitely going to beat the index, but the growth rate assumption of 15% has to stay valid, right? In my opinion, $340 entry is not a bad price, but personally, I would wait for it to fall in the 280 range at least for me to add to my position. I already own Microsoft at a cost base of about $210. Now let's look at the great execution case. I've shown the same case, and I'm sticking to the same case now, even after this quarter. I'm assuming 20% year over year growth rate in the great execution case. Remember that they're at 8% in the most recent quarter. And I'm still keeping 35% net profit margin and a 30 multiple and a 3.5% buyback. I think it's very optimistic. With that, the stock price in 2027 would be about $824. Current stock price is $340. So that represents about 142% gain in 5 years, which is phenomenal gain. And on top of that, we get to collect about 3.5% dividend in the next 5 years. So if you believe in the great execution case in which they can pull off this 20% year over year growth, then we're looking at an attractive gain. But personally, I'm not going to go with this case. I'm going to go with the case with reasonable assumptions for my personal journey. So I'm still going to wait for this stock to fall to about $280 for me to add to my position. If it doesn't get there, it's okay. I'm going to stay on the sidelines. Let me know your thoughts in the comments. Thank you so much for watching.